Welcome to your single source for insight, inspiration, and unfiltered conversation in financial services. In each episode, we'll talk to the disruptors driving innovation, unpacking the market trends, strategies, and the stories behind the numbers. Follow and subscribe to stay at the forefront of global finance.
Hi, and welcome to the Single Source Podcast. I'm Heather Zumarraga, and I'll be your moderator. Our focus today is how tokenization enables an always-on fund industry. I'm joined by SkyBridge Managing Director Peter Martini, Ava Labs Vice President of On-Chain Finance Morgan Krupetsky, and Apex Group's Global Head of Digital Assets Daniel Coheur. This is a very timely topic in terms of where the industry is going, so I wanted to set the stage first with the fundamentals for those that may not be experts in the space. It's really interesting to see bridging of the gap, so to speak, between traditional finance and decentralized finance. So Morgan, given your background as starting Ava Labs, please tell us, what is tokenization and why should investors care?
I think the best person to answer that is definitely Daniel, but let me kick it off, and then Daniel, if you wanna add in. Tokenization, honestly, it's a very boring concept. It's really a tech enablement tool. No, but I mean, I'm super excited about it. It's really the ability to represent ownership of an asset on a blockchain network, and that asset can be physical, it can be financial, it can be a commodity, and really anything in between. And really the concept of tokenization isn't necessarily new. I think the industry's been working on tokenization in some way, shape, or form for, quite some time now, even back in 2017, which I'm sure Daniel will recall having built Tokeny. But I really do think, this time is different. I think, tokenization is really here to stay. Broadly, it's referred to, tokenized assets are referred to RWAs, or real world assets, representing quote unquote real world assets on a blockchain, as opposed to necessarily crypto native types of assets. But we're finally seeing not just the institutional grade infrastructure in place, which is brought to the industry by Tokeny and others, but we're also seeing institutions not just touting the future as tokenization, but actually doing stuff in the space, which is definitely exciting to see. And I think that will continue to grow and proliferate the rest of this year and beyond.
Daniel, do you want to pick up on that? Please educate us on Tokeny and your background.
Actually, I totally agree with you, Morgan. Tokenization is boring. As much as CSD is boring, custodian is boring, all those technology that are there to ensure trust, control, and compliance are boring, in the sense that it should not be an investor concern to deal with the technology. It's our duty and obligation to make this technology transparent, allowing the investor to focus on what matters for them. So is it helping me getting more investors, so supporting my capital formation? Is it helping my investors having access to secondary trading? Is it enabling them to get more yields, so allowing the assets to be made available in DeFi protocol, for example? So we've been dealing with the technology at Tokeny for the last 8 years, convincing people that the tipping point will come when we will not talk about tokenization anymore. I think we're coming close to this point where market infrastructure are being equipped with the technology, where the user friendliness is more around Web 2 type of interfaces, with the backbone being Web 3, allowing all those value-added services and investors services that I just referred to.
Right. And Peter, let's bring in your expertise at SkyBridge. You have a wide spectrum of asset classes available: mutual funds, hedge funds, ETFs, and now a tokenized fund. So help us understand, from an investment manager's point of view, what are the biggest pain points, if any, that maybe traditional fund managers face, since you're not really one of those anymore, from this perspective, or maybe the investor's perspective?
Yeah, so I mean, here at SkyBridge, we kind of sit in a unique position. So, we are an asset manager, traditional asset manager, but we're also a fund of funds. So we're also an investor in some private placement and limited partnerships, as well as other types of vehicles. And beyond that, we kind of transact and do a lot of investing across the spectrum, from everything from spot native digital assets to exchange traded ETFs, public equity, private equity, kind of a whole range of things. And from that, we typically see the biggest pain point from our perspective. The biggest pain point is typically in settlements. Typically, when you're trying to transact and you're trying to make investments across a whole broad range of universe of different asset classes, each asset class has, some are easier, some are harder to navigate, but each one can have its own unwanted complexity behind it. And when it comes to things like settlement, the biggest issue we usually face is when we're trading in markets that are outside of the US, they can have different settlement rules. And whether that's at the exchange level maybe doesn't have the same settlement time that matches up with the US time. Maybe there's a bank or a national holiday that kind of impedes the settlement of a wire or a transaction for something you're trying to do. Or sometimes it's more broad in that we actually can't physically or we can't actually custody the asset. The custodian that we have, they just don't have an agreement in place, or they can't hold the asset. So we actually have to go an extra step and open up a new bank account with a new brokerage or a new custodian, and actually have them be able to custody the asset, right? All of this just adds unwanted complexity, unnecessary time that we have to spend trying to mitigate and kind of sort out these issues. And the nice thing is that when disposing of things like an investment in like a hedge fund or a private placement vehicle, because we're investors in those things as well. There's also a lag, right? There's also a lag between when those vehicles will strike the final NAVs and when investors will be able to get their cash out, right? And that time frame, during that time, the back office for the hedge fund or whatever vehicle it is, they have to take the time to reconcile, to make sure all the trades have been processed correctly, to make sure everything matches and takes and ties, which is, a burden. And that delays investors' cash payments, it delays, NAV final statements, and it's kind of just a pain overall in the industry.
I also think what's really interesting, and maybe piggybacking off of what Peter said, is because of a lot of those manual processes as it relates to the middle and back office, I think that's a lot of the reason why large alternative asset managers don't open up their funds to a wider investor base and keep investment minimums fairly high, because it doesn't make economic or operational sense for them to lower investment minimums because it's just too much of an operational burden. So the tech really allows, obviously within the confines of regulatory requirements, but it does allow investment minimums to be lowered enough such that it makes it operationally and economically feasible for funds to take on a larger number of investors, because a lot of these frictions are alleviated through the tech. And so that's why when people talk a little bit more about kind of the democratization of finance, it's really because these investment minimums, it makes sense using this tech for them to be lowered and therefore potentially access, a wider investor base beyond just institutional investors or, let's say, ultra high net worth investors as well.
Yes, those legacy systems are no longer enough. Daniel, that's what we're seeing, the growing demand for speed, right? People want things now. To Peter and Morgan's point, they want it instantaneously. So there also needs to be transparency, though, and compliance. For example, what capabilities are essential to meet the demand? What is Tokeny at Apex Group helping to solve for here?
Thank you, Heather. Well, I think we need three critical capabilities. One is identity and compliance on chain. Ensuring KYC AML can be embedded directly into the fund infrastructure and transactions are seamless but still fully regulated. That's essential, right? KYC is not going to go away, but it's going to go on chain. So is compliance. Interoperability is the second one. Funds and investors shouldn't be locked into silos. That's why we're using blockchain, right? To have a decentralized infrastructure, but relying on one single database. So we need standard like the ERC 3643 to make tokenized assets transferable across custodian, exchanges, and platform without, again, being a concern for the investors on which infrastructure the token has been issued, for instance. And last but not least, we need real-time operations. Moving away from batch processing and cutoff time so that subscription redemptions and transfer can happen instantly 24/7. So in short, we are not just digitizing the fund, but we are re-architecting it around the investor's experience.
Yeah, let's talk about that, Morgan. I know you said parts of tokenization may be boring, but not the evolution of real world adoption, like what you're doing at Ava Labs. You aim to digitize all of the world's assets. Like that to me is really exciting, but how are you doing it? You know, being on the forefront of the evolution.
Well, obviously I'm drinking the Kool-Aid, so I'm a little biased, but I think from an Ava Labs standpoint, you know, the firm is this awesome mix of academics, engineers, and business people. And a lot of the, you know, quote unquote business people come from the traditional financial services space, both the buy side as well as the sell side. So I think we've you know, prided ourselves in being able to really develop and cultivate trusted advisor relationships with our, you know, financial institutional partners, including SkyBridge, in bringing them onto leveraging blockchain rails and helping them operationalize their digital asset strategies. And so to your point, Heather, you know, from the beginning, our mission has always been to digitize and tokenize the world's assets. So it's something that we're focused on from an Ava Lab standpoint, not because it's popular, but because, you know, we truly believe that the world's assets will be digitized and tokenized. And the tech can really be used as a tool and an enabler to upgrade legacy financial services infrastructure and institutional workflows. So it's something that we've been focused on from the beginning. And since, you know, even 3 years ago, we've been working with top quality asset managers to really cultivate a high quality asset ecosystem on Avalanche, starting with our work with KKR several years ago. And then since then, obviously, I've added SkyBridge to that mix, in addition to BlackRock, Wellington, Wisdom Tree, Van Eck, and Apollo, and, you know, the list goes on. Now we're very much also focused on the demand and distribution side of things. So working within our DeFi ecosystem to the extent possible to integrate tokenized assets into DeFi, and to what we were saying earlier, increase the utility and value of those assets through this greater mobility. And then also working with various more kind of traditional distribution channels to really integrate these assets into call it neobanks, fintechs, other types of wealth tech platforms, and abstracting them away in a way where those end users, again, don't necessarily know or care that something is tokenized, let alone what blockchain it's on or what stablecoin it uses, but that now they have access to net new products and services by way of the tech enablement. So it's something, again, we've been focused on for a while. We pride ourselves in kind of the institutional landscape that we have and continue to cultivate. And I think in general, just kind of taking a step back, we've always been focused on, to your point, real world adoption and real world use cases, and partnering with builders and projects and teams that are building applications that actually solve real world problems and drive forward business imperatives. Novel concept in crypto. But it's something that I think unifies the Avalanche ecosystem, frankly, not just within financial services, but across gaming, other types of enterprises, sports, entertainment, as well as government use cases as well.
Yeah, Peter, Morgan briefly mentioned her partnership with SkyBridge, for example. For us at Apex Group, we're so grateful for your partnership. Recently tokenizing 300 million in hedge funds using both Avalanche and Ava Labs, and Apex Group, of course. I think you have an even bigger announcement with Ava Labs as well, if you want to touch on that. But what motivated this move? Were there any challenges along the way?
With regards to the bigger announcement, I won't say on Anthony's thunder. I'll let him kind of, you know, announce and discuss that. But you know what really motivated the move? I mean, so when you take a step back, you know, we're really kind of in sort of a unique position for the first time ever, where the digital asset industry has both a supportive executive branch and a supportive regulatory environment that's actually good for cultivating, right? And both have been outspokenly positive about, you know, not necessarily trying to stagnate any sort of growth, but actually embracing technology, one of which obviously is blockchain. And from that, you know, you've seen, you know, actual legislation being passed that's really beneficial, right? Take the Genius Act, for example. You know, that introduced, you know, that introduced legislative regulatory framework for stablecoins, really kind of almost sort of setting in motion and solidifying the idea that, you know, tokenized assets are going to have a place in the regulated financial world. And then, you know, kind of beyond that, you've had, you know, announcements, you know, this past September, just a month ago, by the CFTC, CFTC Chairwoman Carolyn Pham, she announced that they're taking an initiative to look at potentially using stablecoins as collateral in the U.S. derivatives market. Right, this is a huge leap. This is a huge step forward, and we think is really beneficial towards getting potential mainstream adoption by sophisticated investors of digital assets. So we're very excited to kind of see that kind of momentum kind of build. We've got a good environment for that. And then you're seeing that being noticed by other big institutional players as well. NASDAQ earlier this year is working with U.S. regulators and submitted a filing with the SEC to allow the trading of tokenized stocks on their exchange. And the president of NASDAQ, Tal Cohen, he wrote about how tokenization and traditional markets can make overall the financial trading world more efficient. So a lot of positive aspects from that. And we see, that, the integration of blockchain and real world assets into the financial world, we really see that as kind of just the next evolution in modern day finance, right? It's something that can be done by everyone, everywhere, every day. And it can help make, a more inclusive financial world, which is just better for more market participants as a whole.
Yeah, I love it. The next evolution of finance. And Daniel, what you're doing at Tokeny with Apex Group, how do we help enable this evolution, right? Not just from redefining fund operations with 24/7 services, but opening private markets up to retail investors, which Peter touched upon with some of the most recent regulations, for example, the Genius Act in the US.
So absolutely. So what obviously when you deal with regulated instruments, you need to have an asset servicer that is providing the regulated backbone and framework for servicing that instruments. And that's exactly what Apex does. Tokeny provided technology. So it's really merging this regulated infrastructure backbone with the technology and the compliance solution that Tokeny has been developing that enable to create a representation of those assets on public infrastructure while having the control function, while enforcing the compliance and any element, of course, that is inherent to the restriction for a fund to be issued and distributed. So it's really merging those two capabilities that enable us to operate not only 24/7 and manage those subscription and redemption, plugging that into the existing infrastructure of Apex, fund accounting, TS system, allowing services such as fractionalization and everything that reports to the obligation inherent to a fund in terms of reporting, compliance, etc. So what we do is we really bridge the traditional world and the digital native world of finance with our technology.
And Avalanche, Morgan, offers speed, security, and affordability as well. You're essentially a disruptor. So what else should institutional and retail investors do? I mean, what do you want them to know?
Yeah, so I think from an Avalanche standpoint, there's really kind of two main differentiators, and you touched on it kind of in your question, but Avalanche, one of the big breakthroughs is the concept of the Avalanche consensus mechanism. And without getting into, uber technicals, the so what or the implications, it's extremely fast. It reaches transaction finality within a second, which is important in general, but it's especially important for high value transactions, especially those between financial services institutions and those in payments, where you can't necessarily afford for a transaction to stall because, let's say, Taylor Swift is launching NFT ticketing elsewhere on the network, and you don't know if your multi-billion-dollar loan transaction is gonna settle. So Avalanche consensus really enables transactions to settle and happen very quickly, as well as extremely cheaply. The network is EVM compatible, which is the programming language Solidity is really the one that we have found most of our institutional partners are the most comfortable with and prefer in terms of deploying various assets and applications. And so the network is EVM compatible. Anything that's been built for Ethereum or Hyperledger or Quorum is very easily kind of deployed and literally copy and pasted onto the Avalanche network. And because of that, it means that the network boasts all of the tooling and open source kind of applications and infrastructure that come with the Ethereum ecosystem. And so everything from stablecoins to compliance applications and tooling and tokenization platforms and on and off ramps and stablecoins, all of that exists on Avalanche as well. And then finally, the the really large differentiator is we start to see large companies launching their own purpose-built chains. Avalanche is not a single monolithic network like Ethereum or a Solana. It is really a network of many customizable and natively interoperable networks. And so we realize, if you're a gaming company or if you're a government institution or a financial services company, you're obviously going to have very different reasons for why you're leveraging blockchain infrastructure. And with Avalanche L1s, you're basically able to totally customize your blockchain infrastructure and architecture to your particular use case. And so with that, the network really allows for these purpose-built L1s to be launched fairly trivially and in a way that natively interoperate with each other. And so, the network has taken a decisively horizontal scaling approach. And I think as more and more companies, we saw Stripe launch their own chain, Circle's launching their own chain, FIFA has their own L1 on Avalanche. I think the network is very well situated for when we'll start seeing more and more companies, choose to launch their own networks. Avalanche can kind of continue to grow and scale with them as well.
We at SkyBridge, we think of blockchain and we think of, the tokenization of digital assets. We think of them as disruptive technologies, right? They have a place and an ability to potentially streamline and make, trading and financial markets more efficient. And, Anthony, he recently said, he thinks the next decade of finance, the next theme of the next decade of finance is going to be the tokenization of real world assets. And he's not alone in thinking that. It's not just us that's thinking it. Take earlier this year, BlackRock, the multi-trillion-dollar largest asset management firm in the world. Their CEO, Larry Fink, recently penned in his annual shareholder letter to investors that he believes that digital payments are going to be the next, next evolution and next sort of efficient market frontier that can help solve and mitigate a lot of financial settlement and payment issues that we have. And he went actually even as far as to say that he believes that, or he wrote that every stock, every bond, every fund, every asset can be tokenized, and that's a really powerful statement coming from the world's largest asset manager. That could be extremely disruptive across the board, across a multitude of different industries, if that comes to fruition. And, we're excited to see that. And you see other Wall Street partners and other Wall Street firms that are looking at this as well. You've got asset managers and Wall Street banks that are looking at and talking about, exploring adoption for tokenized assets and what those potential benefits could be. So for us, like I said earlier, we really do view this as sort of the next evolution in modern day finance. And so, for us, we didn't want to just sit by and just kind of watch it happen. We wanted to actually get active in the space.
And Daniel, what's your biggest takeaway from this transformation and our discussion?
Well, I guess, the biggest takeaway that I can share with you is that one player cannot do everything alone. So whether from the technology perspective, and, I'm always hearing, well, tokenization is the easy part. Well, yes, it's the easy part if you obviously have a token that doesn't go anywhere, right? But if your token needs to insist on multiple infrastructure, need to be plugged into settlement smart contract, need potentially to be embedded in other smart contract that will be plugged into DeFi solution, then you need something more sophisticated. Not only at the token compliance level, which is obviously what the ERC 3643 is about, but also it needs to plug into a wallet infrastructure. It needs to be plugged into a blockchain infrastructure. So for that, you need collaboration between all the tech players. That's why we created a nonprofit association, the ERC 3643 Association, where we now have 150 members representing all the ecosystem that is around this technology. But obviously, that's the technology side. Now, you also have companies like SkyBridge, asset managers and asset servicers, and of course, networks such as Avalanche that need to work together to deliver those use cases end to end. We can, of course, look at BlackRock, but BlackRock BlackRock wouldn't be able to issue, its token without, an asset servicer, without the technology behind it, without an infrastructure on which the token is being deployed. So again, this is an infrastructure initiative. This is an industry initiative. So we work together to make it happen. So collaboration is key to obviously create the critical mass that is relevant for decentralization. Again, this is not a digitalization thing. This is decentralization thing. And decentralization can only bring its benefit if we reach critical mass.
Mm-hmm.
Yeah, those partnerships are very important. That's why I think these discussions in a public forum are great to be had, because we can really help support this transition or this evolution. Morgan, what types of industries are showing the fastest adoption of tokenization right now? What are you seeing at Ava Labs?
Yeah, so I think it's interesting. We were talking, I think Peter mentioned this part earlier in terms of how prevalent this technology is or will be. Think about like when the internet came about, people were distinguishing between internet companies and traditional companies. And I think at some point when we know that we will have succeeded, we won't be talking about DeFi and CeFi and TradFi. We'll just be talking about finance, and we won't be talking about blockchain companies. We'll just be talking about, the vertical kind of specific companies out there. And so I think, blockchain obviously and tokenization is not a vertical. It is really a horizontally applicable infrastructure, especially something like stablecoins, which, going back to your question, really have been the quintessential tokenized asset. People say that the killer app for crypto is stablecoins. And so in terms of adoption, that's really the area that we've seen the most uptake is in the stablecoin arena, not just in the US, but really globally throughout the global South and beyond. I think at this point, there's about $280 billion in market cap of stablecoins today, and that number continues to grow, especially after Genius. I think a lot of companies are redirecting back their attention and focus on stablecoins. And stablecoins are really the top of the funnel, I think, for a lot of these other tokenized assets, whether they're money market funds or private credit, tokenized stocks, and really everything in between. So in terms of where we've seen the most uptake, I would say stablecoins. Beyond that, I think that has led to the proliferation of tokenized money market funds, which we're seeing a lot of those obviously come up from various asset managers, and then ultimately to various other types of alternative funds, whether it's hedge funds, private credit funds, private equity, and everything in between. So that's the proliferation or the kind of order of operations that we've seen. At the same time, I think there's been a lot of different teams out there that are trying to do tokenized equities using various approaches. I think that the recent development in news with NASDAQ exploring how to integrate tokenized stocks is really interesting. Obviously, there's a lot of regulatory and compliance considerations as it relates to that, and kind of standardization of different token standards and requirements. But, I think any of us, if you asked us this time last year if we'd be here now, I think, all of us would have been very surprised. So it's really exciting to kind of see the macro as well as regulatory tailwinds, especially as it relates to tokenization.
Yeah, it's happening so fast, and I think it's more complex than people think at first. Just to be on chain, for example, in the US, well, that's great, but does that mean you can navigate jurisdictions? And the answer is no. Like, it's not that simple. To your point, the regulations are so different in different areas. Peter, let's shift to you. How has tokenizing your funds impacted reporting or transparency with investors, or maybe not?
So we did just tokenize the funds about a month ago. And so, with the tokenization, right, this really does open up a whole new channel, a whole new vertical in which people can view and hold their asset. And so far, we've done several calls with investors, most of which have been, I'd say, really more getting them kind of understanding blockchain technology. For a lot of them, this isn't really sort of their forte. Our investor base is a little bit older. They're really starting kind of trying to learn and understand a little bit more about, what exactly is blockchain and how, tokenized assets can function. And we kind of see that, the adoption is not going to happen overnight. It's going to take a little bit of time. You need more institutions coming online with more tokenized assets to get people more comfortable with that. And as that happens, we think it's going to, mainstream adoption is going to continue to expand across all asset classes. Whenever you have, a new technology that comes around, that's better, that's faster, that's cheaper, that makes things more efficient, it tends to replace the legacy ones. And so, it's been, it's been a rollout, and we're continuing to have communication with investors about this new asset class that we have, this new way they can hold the current asset. But overall, it's been a positive experience. It's been a good educational experience for a lot of investors. And we've had a lot of communication with them. From a reporting standpoint, ultimately, the reporting is going to exactly mirror the current reporting we have. We have a private placement fund, so we can't speed up or increase that by any means. But again, this gives them a new way and a new vertical to be able to hold the asset.
The education piece is so important for everyone, not just institutions, but the retail investor as well. To the panel, I appreciate your partnership. To Daniel's point, we can't do this without you. Both Ava Labs and SkyBridge, thank you so much for joining us today. One thing for me is clear, that these discussions and an open forum like this are very important because we can really help support this evolution. Apex Group is your bridge to scalable, trusted digital finance, and we're excited to keep the conversation going and to help you unlock the future of finance today.
Thank you for listening to The Single Source, brought to you by Apex Group. If you enjoyed today's conversation, be sure to follow and subscribe.